watching Businessworld Live. I'm Danie Laurel. The markets are closed today, but let's go straight to our top story. The government's outstanding debt slightly eased in November. That's on the back of payment of some domestic liabilities and favorable foreign exchange rates. Now, data from the Treasury Bureau showed that the national government's debt inched down by 0.3% to 11.93 trillion pesos in November. That's from the 11.97 trillion pesos in October. However, the end November debt level was 17.7% higher year on year. Government debt has already grown by 21.8% since the start of the year. That's equivalent to 2.14 trillion pesos in debt over the course of 11 months. The end November debt figure also exceeds the 11.73 trillion peso projection set by the national government for the full year of 2021. As we are about to ring in the new year, health experts are warning that with the continuous uptick in new COVID cases, celebrations must be kept to a minimum. Now, just yesterday, COVID cases had doubled to 889 to just about 400, or from just about 420 on Tuesday. Now, the positivity rate is also at its highest since the second week of November at 5.5% rather. Now, the health department said they cannot link this rise in COVID cases to the Omicron variant just yet, especially with the increased mobility over the holidays. Still, the OCTA research team suspects that the higher positivity rate in Metro Manila could be an indication of a local transmission of Omicron. At any rate, OCTA says the country might see up to 8,000 new COVID cases by January. In an interview with a big story, OCTA research fellow Guido David says this is the worst case scenario given the patterns developed during the holidays and the current case trends in other countries. Now, the Philippine markets are closed in observance or commemoration of Rizal Day. Let's zoom out on the equity space in the US and the rest of Asia. You can see on my terminal here the S&P 500 chalking an all-time high, but not just the 70th all-time high for 2021. This as the treasury yields rose, crude oil also holding an advance, and the dollar is steady. But if you take a look at Asia, it's a little bit of a tricky picture here, especially since we are seeing the S&P 500 futures also in the red. Futures lower, and Asia's open is also quite mixed here. You can see the Nikkei 225 swinging between gains and losses this morning. China will be heavily in focus today. That's as the battered property developers are looking at a lot of regulatory crackdowns heading into 2022. You've got some debt holders of two debt holders of China Evergrande Group with the coupons in terms of their dollar bonds due Tuesday said they had yet to receive the payment from this embattled property developer. Meanwhile, you've got Alibaba Group in talks over a possible stake sale in Weibo. That's actually like Twitter over in China, and that might be sold to a China state-owned Chinese conglomerate. Now, recall this is as Beijing is moving to curb the influence of China's tech giants within the media sphere. And in fact, Alibaba, as well as an index of Chinese shares, was sliding down in US trading. But when it comes to the virus uptick, you can see that on the map here in Bloomberg, the brighter spots are the ones with the higher cases in the past 14 days. This, according to Kevin Phillip, he's a managing director at Bel Air Investments Advisors. He says he is confident on the global sentiment. He says despite the global surges in COVID cases, markets are reflecting the new reality. COVID is here to stay, but on our terms rather than their terms. We are facing less of a COVID-influenced world and a return towards normalcy. And of course, this echoes the current sentiments of the World Health Organization. They commented that the coronavirus is unlikely to go away completely and will probably settle into a pattern of transmission at low levels. So hopefully we see that even as, of course, OCTA is warning to limit those activities in the meantime. Now, if there's there's one counter that buoyed the index's last trading week. It was that of the miners. And here to chat about what's in store for them, we have with us attorney Wilfredo Moncano. He's the director of the Mines and Geosciences Bureau. Hello, attorney, and welcome.
Good morning, and good morning to all the televiewers.
Sir, the NGBDNR says that this move, of course, to lift the ban on open pit mining is something that can help spur the economic recovery we really much need. Give us some more flavor, some more numbers on this. How much of a help is this going to be?
Let me start by saying that last year, MGPDNR, supported by the Department of Finance, initiated the writing of a memorandum to the Office of the President offering the mining sector as a potential contributor to the recovery of the economy. And in that memorandum, we highlighted five important points. No, one was the lifting of the moratorium in the processing of new mining projects. That was addressed by the issuance of EU 130. Then second was the lifting issuance of an order lifting the suspension or cancellation of those mining companies that were suspended by the former Secretary Gina Lopez. And it's an ongoing process right now. No, some of the mining companies who made corrections to their adverse environmental findings had already resumed operations. Then third one was the renewal of the Financial Technical Assistance Agreement of Oceana Gold. It's been acted by the Office of the President and was renewed last July this year. And then the next one was the expeditious approval of Minahang Bayan. Well, we offered the Minahang Bayan because this will allow small-scale miners to generate economic activity in the rural areas. And then the last one is this open pit lifting of the ban on open pit mining. So in that memorandum to the Office of the President, there were documents, supporting documents included in that one. There were estimates of how much will be the revenue that will be generated in terms of taxes, royalties, and fees, how much employment, in community development programs will be included, and of course the investment that might possibly come in, no. So in the low
Mhm.
side, revenues that were estimated, if we allow open pit mines to develop and proceed to commercial extraction, an estimated on the low side is we estimated about 23 billion pesos to the national coffer, no. uh,
Okay.
but of course this is not an overnight success story, because mining by its nature takes about 3 4 years 5 years before it can from development before it can proceed to commercial extraction. So it will not be these
Okay.
revenues and taxes and royalties cannot be generated overnight, no. Maybe the next 3 4 years pa, but
Okay.
this will generate employment and of course other economic activities in the sites that they are operating.
Sir, meron bang sort of annual revenue projection, especially since they're saying that this will help with the COVID response, but you're saying po it might take 4 to 5 years pa to get this money, and as you know, we've mentioned already that we have a budget deficit that needs to be plugged, and of course a lot of loans that need to be paid.
Yes, if you recall, in that memo to the Office of the President, the first highlight was the lifting of the moratorium in the processing of new mining projects. These new mining projects, these are not necessarily open pit mines. These are the smaller ones and those that can produce and commercially produce earlier, no? So there are, no, right now there are I think 18 or 19 mining projects, smaller mining projects that have started development, and these are the ones that can contribute by next year. They will start be contributing in terms of taxes by next year. But the bigger ones, the open pit mines, these are the ones that I said that will take a little more time.
Okay, sir, what about employment po? To what extent is the employment going to be the people that had lost their jobs in the mining industry because nga of the ban on open pit mining and other restrictions? And to what extent will there be new employment generated?
Well, including in that estimate, no, that we forwarded to Malacanang, between 23,000 to 40,000 direct and indirect employment will be added. No, right now, the large-scale mining sector employment is about 230, 240,000. So an additional 30 to 40,000 will be added if this uh, new open pit mines will start the development.
Okay, sir, you mentioned that there's a possibility of new investments. Do you have any idea of foreign direct investments that might come in? What's your projection on that? Are there some talks already between the big miners and possible new investments? What are you expecting in terms of new applications?
I will just rely on the submitted declaration of mining project feasibility in this four open pit mines that are waiting for for this department administrative order, no. So in this this four operating these four new mining projects has declared an estimated investment of about uh, in terms of dollars, in terms of dollar, and it's 2.5 billion US dollar for the Tampakan projects, 780 million dollars for Silangan projects, 2.1 billion dollars for the King mining projects, and about $1 billion also for Mount Labo. No? So this in terms of pesos, I think we estimated that there will be a potential investment of about 335 billion pesos investment. No, but of course that investment will be spread over a period of maybe 3, 4, 5 years.
Okay, sir, how competitive is our mining industry right now compared to our other Asian or ASEAN neighbors?
Well, in terms of, I would say no. I would say in terms of the global name stature, no, we are not in the top 10. We are not in the top 10 mining countries in the world. But in Asia, of course, we are one of the bigger mining aside from Indonesia. We are, I think, we are the second biggest mining economy in Southeast Asia. But yes, if we also trace back our history 78 years ago, no, prior to the Second World War, the Philippines was the second biggest economy and
Mm,
mining was the second biggest industry at that time. But over time, because of unstable government policies, no,
mm.
moratorium, environmental activism, the number of operating mines dwindled, and only the medium size mines continued operations, but the bigger ones stopped. No, so that's why from the contribution of the mining sector prior to the Second World War, which is about 20 to 25% of the gross domestic product, it dwindled to less than 1% right now. So we wanted, there is the track record, no? There is the track record that mining can contribute much to the GDP. So that's why we wanted to revitalize mining because less than 5% of our mineral wealth, no, mineral resources have been tapped. So with that
Okay.
resources, if these are developed, then we can increase the contribution of the mining sector to the GDP.
Sir, have the issues of the activists, particularly environmental activists, but not just general safety of employees in these open pit mines, how have these been addressed and how has this changed since the former Secretary Gina Lopez put this ban?
Well, for one, we've issued the DNR issued department orders that corrected some of the mistakes in the past. No, for example, for nickel mines, we have a department administrative order that allow or that set the maximum disturbed area for the nickel mines at any given time. This maximum disturbed area that they are allowed to develop is based on the production target that the approved production target that the secured from the MGB. And I would say, I would cite, for example, a 1 million tons a year surface mine or nickel mine can only disturb 50 hectares of land at any given time. They cannot develop, they cannot open and disturb another 50 hectares without rehabilitating and restoring the previous mine out area. So that's the ano now, that's the policy now. You have to progressively rehabilitate the mine out area before you can develop another new area. So that's one, no? And then we also set and strictly enforce the establishment of the final mine rehabilitation fund, the rehabilitation cash fund, the environmental guarantee fund, the mine waste and tailings free reserve fund, and the monitoring trust fund. Before this were not many of the mining companies were operating, but there were no funds set aside in case in case the government stops abruptly the operation of this mine. You do not have money to restore, rehabilitate this mine. But now we implemented those are in the law. So we have billions of pesos already in government depository banks that can be used in case these mining operations will be stopped or will voluntarily stop because of losses perhaps. They have money set aside in the bank for the rehabilitation.
Sir, final question before we let you go. Given all of these, are you confident now that the policies will continue to be stable? That is, wala na namang ban and then lift and then ban and then lift. To what extent do you feel that you can now move forward with more stable regulatory policies?
Yes, I'm hopeful. No, I'm hopeful that the next administration, because historically, every change of administration, there is a change in the mining policy. No, so I'm just hopeful that the next administration will support the revitalization of the mining industry because it has the track record to contribute to the economy, as shown, as I have mentioned earlier. So I'm just hopeful that the next administration will support the mining industry because it can help our economy recover.
Okay, maraming salamat po. That was a very informative interview, Attorney Wilfredo Moncano, Director of the Mines and Geosciences Bureau.
Thank you, and good morning.
Here are other headlines we're keeping our eyes on. The Customs Bureau has collected 3.3 billion pesos in revenues from pork imports. It's after the government cut the tariffs on the commodities to stabilize pork prices. The Finance Department said pork import volume was at 214 million kilograms starting the second quarter of 2021, or since the presidential order to lower the pork import tariffs took effect. The BOC estimated foregone revenues at about 3.6 billion pesos as a result of reduced tariffs. Recall that the government cut pork tariffs to improve supply and relieve price pressures following the African swine fever outbreak. Now, as of end November, the total BOC collections has gone up to over 584 billion pesos. That's equivalent to nearly 95% of its 2021 collection target. Now, the Bangko Sentral has imposed a moratorium on the increase in Instapay and Pesonet fees for the online fund transfers. That's in a bid to hasten the country's transition into a cash-like economy. The Monetary Board said they will only consider lifting it upon the issuance of a pricing standard or once the volume of digital payments reaches 40% of the total retail payments in the country, whichever comes first. The central bank is hoping that 50% of all local payments will be done online by 2023. And that's a first look into the business day. Today's Thursday, December 30, 2021. Catch Business World live again. That's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.